Hey, thanks for tuning in. This is a weekend review for the week ending May 13th, 2022. We're looking at a weekly chart of the S&P 500, and boy, do we have a lot to talk about. So we got our first form of a breadth thrust this Friday. Just to be clear, the way that this works, and I'll go over to the CMT document over here, and I'll put a link to this in the video. It's called Identifying Bear Market Bottoms and New Bull Market Trends. But essentially, we got our non-confirmation back in November, and this is when IWM and IYT did not make new all-time highs and hold them, while SMH, SPY, QQQ, and everything else did. And that was a signal that small caps were headed lower, and small caps lead this market, as well as transports. So those two are like market-leading indicators for me. We got the sign of a top, and the fact that everything tops at a different time is actually what allows us to find these divergences and identify these clues and hints that the market is running out of steam. And the market bottoms at the same time, right? It doesn't top at the same time, but it bottoms at the same time. And there's plenty of evidence of this. And what we like to look for is that for when it bottoms, signs of breadth that are showing price increase from depressed levels, right? And there's no doubt we're in a bear market. We've been in one for at minimum 6 months, depending on the chart you're looking at. And what you kind of want to look for is these, signs of capitulation at the low. We've had multiple 90% down days. And you come look at this. I'm not going to read this to you. Come check it out if you're interested. But ideally, what you're trying to find here is at the end of these declines, you want to find 90% up days or any other form of a breadth thrust, and I'll look at a couple others here. The 90% up days falls under the upside downside ratio. We'll look at the ARMS index, the trend. We'll take a look at the new highs, new lows. Those are just 3 of the 10 that I have and I've studied. So yeah, let's get into the charts. But the point is that we've got, a breadth thrust. We had the 90% capitulation days, and then we had the 90% up day. And so what that means is that the lows on all of these charts that we're about to look at are going to be the lows that we're going to play against. Any real acceptance below this low, and we're not interested in the trade anymore. That being said, this is still in a descending channel, but we now have the structure of an ABC, and what this does is it traps a bunch of people and is what creates like all the uncertainty, up down up or down up down. So yeah, we have the setup. We came into the levels that we've been waiting for, these fib extensions, the 1.0, right? Look where the 618 was. You got a huge bounce here from that. When that was lost, the 1.0 becomes the target. If that is lost, it becomes 376. So in no way, shape, or form am I predicting that the bottom is in. All I'm pointing out is we have our first 90% update, our first sign of a breadth thrust. We'll take a look at the trend here in a second, which also can show breadth. And we'll take a look at the new high, new lows. All of those are showing us signs of breadth. But that being said, all that's happened is a stock that's in a declining in a downtrend here in all these time frames, all it's done is start to stop going lower here on the daily. Again, a lot to prove very, very early. But you're taking away to the evidence approach, and we have a lot of bullish evidence that came in at the end of the week. They certainly could have continued lower, and they decided to stop. So we'll take a look at some of these other indexes real quick. IWM, we pretty much hit the look below and go target. 167 is that target. So again, I could see one more low. I can definitely see that. It still would likely be a low to buy and a bounce worth participating in. But they bounced here from 170. And if we zoom out to the weekly, you'll see that's the 50% correction of the entire move. So this whole move just corrected 50%. So that's a really, really important level that we like to look at. It also just gives you a low to trade against. Here's the 200 on the weekly. Okay, this is an uptrend. right? Short-term downtrend, long-term uptrend. And the monthly is great evidence of that, right? You really just hit the bottom of the Bollinger Band. So you have this huge move up. We close back inside the bands, fall to the 20, which is our mean. That was given up, and we fell instantly to the bottom of the band. That's why I have these bands on the chart. They're like magnets at times. So we've got the 50% creation, 50% correction complete. You've got the PPO has reset from 11 to 3. Maybe it's going to go to 0, but I just want to point out that typically happens way later. So like this is what I think we're in for. And we just had this bit, okay? So like that's where we are here. And we're looking for something like this. All right, so we'll hit these lower levels way later. That's what I see. But before we do that, we're gonna head all the way back up, likely to this breakdown area of 207 to 227. That's what I see on the monthly here. And again, I'm looking at IWM and I'm looking at SMH because those and IYT are the things that signaled to me back here that a major top was in. We need to see that a major bottom is in by seeing them show me signs that we do have a bottom. And in terms of these fibs here, it's so subjective which level is the level we want to watch. I think this January 24th period was clearly the moment in time that all of these charts bounced. So I think we're there. Again, this could come to 211. But in reality, this one closed green on the week, closed near the high on the week, touched the bottom of the band and bounced on increasing bull volume. Didn't get above the 5 on the weekly, so that's what we'll be watching this week, but did approach the 20. So SMH already hit the 20. So they're going to start this week real, and by the way, still has all the divergences you'd want to see. All of them. So all these lows coming on less momentum. And again, long term, like monthly, quarterly, these are uptrends. It's going to take time to get something like this. It doesn't just happen right away. You need to have this move down, a move up, and then a move down, right? So all we've really had right now is the move down. And when this move down ends, you're going to get a big rip your face off rally up before we do it all again. So this is what I'm seeing, and I'm seeing here on the monthly a setup for all of these major indexes, which have now had their PPO cut in half across the board, 20 to 10. That's historically speaking, that is a really, really nice place to start scaling in to longs. And again, in my perspective for all these charts and where I sit, is we've basically done the 618, we've done the 1.0, we've got that in everywhere on all the charts. And we'll go through QQQ real quick just to show you it's the same thing over here, right? They like to, again, if you want to draw it consistently on all these timelines, we want to use the January 24th. So if we do that, we hit the 1.0 extension at 297. And yeah, that's kind of where I sit. And if that fails, we'll go to the 1, 2, 3, 6, right? This is just how this works, right? I don't need to know, is this going to be the bounce that leads us out of here? It doesn't matter, right? None of that prediction matters. All that matters is we got a low after coming into the 1.0 extension. They close below it for a day or two, and they instantly recapture. So to me, that says we're going right back up here to the 618, 324. And if they fail at that level, it means we're coming back down here to the 1, if not lower. The trend and momentum remains down, but the trend on the quarterly still remains up. This is, in my book, this is just the first part of the decline. You're going to need something like that if you are really going to do much more than what we've already done, which is just a little ABC. Again, 237 area, strong level, 260. So again, if we lose this rising 40 at the 280 area, then we have something else going on. But historically speaking, as you just saw, I'll go back there one more time. Like, this is the level to buy. If you don't want the Qs at 280, then I'm not sure you understand how to follow a monthly trend. Right? This is your chance to add. We had our chance to sell. We have some signs of breadth. It's possible that we could go and break the low. Go read the document I posted and showed you earlier. I think it's like half the cases they set another low. But in my book, that new low would likely be met with a rally. And ideally what we want to see is renewed demand for stocks after seeing capitulation, right? We saw capitulation in some form or another, depending on the breadth that you look at. And now we've seen some breadth improve. And let's take a look real quick at what I mean. So let's pull up the trend and just go into, so 30. And let's go look at the weekly. Okay, so the 2020 COVID crash came down to like 50. We hit a reading of 30 with all these positive bullish MACD divergences as these new lows are coming in. That's bullish to me. Again, you'd like to see the move out of here, but what this is showing me is capitulation, right? Just like this was showing me everyone was in back in 2021 summer, like everyone was in the market. This is showing me everyone's out of the market. You look at the new high, new lows, like, so we had extreme bearish readings down here, neg 1,000 to basically flat. So that in and of itself is a nice form of a breath, but that is not enough. And what this is showing us is still a downtrend that can certainly come lower. So the new high, new low is not telling us one way or the other, like the trend and the 90% upside downside ratios are. I think there's a McClellan we can look at too. We'll save that for the next one. But the point is, like, there's like 9 different breadth thrusts, 10 different breadth thrusts. Go find the ones that you like to look at. These are the ones that I look at all the time, and they're showing me that the breadth is improving. This is Q1 performance, and what I want to point out is it's still just energy. But the reality is the leaders in energy, like APA, are freaking flat. So you're almost 2 months into Q2, and the leaders historically on the year, so just going back to the year here to show you, out of all the stocks and sectors I watch, right, it's been energy all year. But now for all of Q2, you can't make a new high. This to me is not good. This is the change in trend. Right, we've got the high here, and now we're starting to pull back on these energy names. And XLU and gold and these other things that we're holding up pretty well, their underperformance in Q2 is now showing that they're negative on the year. And things like Costco, XLU, XLP, gold, these things were green back here in April, and now they're red on the year. Again, so this is a massive distribution, and the things that are down the most on the year are the things that I'm going to be looking for to see relief and opportunity. That's why I think moving forward, the opportunity will be in things that are positively correlated to IWM and SMH and IYT. Those things I'm looking to see relative strength in outperforming. So let's go back and take a look at TNX real quick, which is the 10-year. I do believe that this is setting up for a bigger move lower. But again, I just want to clear off some of this stuff and point out the divergences here. We do have a high here, and it is the highest in momentum, but we did not precede the high going back here in May of last year. So that is a potential wave 5 setup. This is the divergence we need to see. This would be wave 3 of wave 5, and we just put in this little move here. We are overlapping. Everything is overlapping on this chart. So this all looks corrective to me. Like, as we move in, if we move in above this like 323 area, it'll be very interesting to see how price reacts. Because what I'm looking for is to see if this continues. 1, 2, 3 months closed outside the band almost always leads to a rally back to the band. And right now the band's at 1.6. Okay? 1.6. And current price is almost 3. So I am predicting, this is the prediction, TNX will pull back at minimum to 2.5, but more realistically 2 over the next 5 months. And that in and of itself will renew demand in the housing markets and renew demand in bonds, which look absolutely horrible, will renew demands in everything that's positively correlated with TNX and everything that's negatively correlated with TNX. Like, in my opinion, these meme stocks that we've been looking at, those things should have, in bonds, for example, should have relative strength. And if we go look at TLT versus SPY, I want to point out, like, what we just had here is what we had back here at the start of the year. You're getting these like ABC ups, ABC up, and then new impulse lower, right? And that impulse lower, if you overlap this with SPY, you just go back to like March 7th, just to give you context. What was happening March 7th is this rally here, okay? That's what was happening when this signaled, right, that the relative strength in bonds was ending. And how did it signal that? It got above the top of the A leg and then closed below all the moving averages it captured and never looked back. And I believe that's what's setting up right here. This, to me, is ABC into a declining 40, back up to the 0 line, bearish divergences. We're going back down to test this low. There's just no other way around it. And if that's going to happen, then what we want to look for is relative strength in SPY again. And as soon as that ABC completed, check it out. Boom, captured the 5. So I do believe there's a lot of value in this TLT SPY chart. That's why I post it. That's why I share it. Check it out. Check out for these types of divergences, and go from there. So let's go back in. Let's take a look at Bitcoin real quick. Another risk on, risk off indicator. I will say we came right into my levels, and here we are bouncing. Bitfinex or whatever, this whole Ponzi scheme crap, they never show the right levels. So like if I go check other exchanges, we hit my 618 at 25,937. On Bitfinex, it's showing we did not. But look, that is when all the volume came flooding in. So now if we zoom in to the hourly, you start to get my favorite bottoming pattern. Right? So you've got the bullish divergence, the bullish hidden divergence. Even though we have lower price, we have way higher momentum. We come down, we set a higher low, PPO resets to 0. Boom, trend mode, recapture, back test, trend mode activated. We're going to see, but this to me is one of the most bullish setups we've had in crypto in a while, right? Like the amount of negative sentiment right now is unreal. And where is price? Knocking on the breakout door. Above 31K is a strong buy. And what we start to target for this is a rally up to 36. So you're looking at 26 to 36, and it's going to happen quick. Again, what's at 36? The 5 and the 10. And I would expect to find some sellers there. All that being said, who knows how the structure of this plays out, whether that's ABC and it just ended or it needs to go, who knows? We'll find out this week. There's no need to guess. What I'm telling you is this hourly pattern, right? This is about to ignite, okay? It's either going to put in a new impulse lower, something like this, No exaggeration, like a mirror image, right? Or it's about to do this. So, and that's going to come from this recapturing the POC. So that's what I've got in Bitcoin. I definitely see risk on. I definitely see all of the sentiment there just absolutely crushed, and all the bears just dunking on the Bitcoin bulls. And when you see that, it's generally a sign. Not to mention when I have something like this, right? Is this just an expanded ABC? Right? Here's your big 1, here's your 2, here's your 3, here, and maybe 4 is way longer, right? But maybe that was your 4, and we've got one more rally up to all-time highs. Because again, we've got a zigzag here, very clear. So we'd look for a flat here, and sure as hell, that's what we've got. Again, I don't know. We don't need to predict. I'm just telling you, the closer we get to this 20, just like every other chart, just like IWM, weekly 20, the closer we get to that level, the less bearish I become. Okay? That's the level we were looking for. Why that level? Because we're looking at the monthly 40 on basically every chart. Bitcoin included, right? These are all just positively correlated assets. And if that's the case for SPY, well, then SPY's coming down to that 360 level. All right? I mean, that can definitely happen. Maybe 350. That's the 50% correction. And in that instance, I'd see IWM coming down, to the 150 level, which is all on the table. But to me, those levels come on the C leg. This is the A leg. That's when we get these levels, right? Not yet, but after the election, next year, something along those lines, right? Because the damage has already been done. Like if you look at the scoreboard, it's over, right? Here's the scoreboard. Here it is. Year-to-date scoreboard for pretty much all the stuff that you'd want to look at. So if you bought SHOP, you're down 70% of the year. Let's take a look at SHOP for a second. And we'll kind of end on this one because I don't want these videos getting much longer than 20 minutes. A bull market going back to 2015, 2016 has just corrected pretty much back down to the 1. Now, again, I don't know how this is going to end. I don't know subjectively how you label that. I can just tell you objectively that if you put these fib tools up, the low to the high, you start to get a retracement that looks just like most other retracements we see. Anything below the 8.5, and we're doing 100%. She's going to $18. If she's going to 18, I highly doubt she's going to 18 from 1,700. You're not going to just go straight there. Even if she's going to 18, she's going to do something like this. Okay? But you got to rally back to the 10 and the 20. Look how far, when everyone thought this market was so extended, right? They were being subjective and emotional. I can tell you objectively, this is the most extended Shopify has been in the entire history of her trading. She is 67% below the 20. Even at the peak, let's say here, sorry, how far down to get to it? 58. Okay, so I mean, this is about as extended as it gets. And when you start to look at what's happening on the daily, you see, well, we came pretty much right to these levels. Now it's possible she's got to come lower, but look what happened. The bull volume is flooding in down here in the 300 level. And one thing that I kind of don't like about TrendSpider is they don't have quarterly charts. But if you go pull up a quarterly chart of Shopify, you'll find that down here at 334 is a very, very important pivot. Yeah, we can find it here in TradingView. And, well, we'll look at it another day because I'd have to reset all those charts. But what you end up finding is if you go back to a quarterly, and I'll try to find it here on the monthly, this right here, this volume candle where she closed above is where everything started. And where did this, like, so this little ABC here, right, this little move that confused everyone, what happened after that is this huge move higher and out of here, okay? What's the low of this? 305.30. What's the low over here? 308.06. Okay, what's the low here? 334. Well, if you go look at a quarterly, it looks very similar. Something happened here where market participants decided to buy a ton of SHOP. And now they've done 100% round trip. So if you bought it and you made all this money, right, this huge appreciation, and you never sold, like up 400, 500%, you're now down 80%. Okay, so anyone saying the bear market's about to begin, are you ignoring the 82% decline on this stock that was at all-time highs at the start of the year? I mean, was above all the moving averages on all the timelines. You know, so it's like you can't. Everyone gets the hindsight bias so quickly, right? But look at what's already happened. So, you know, whether she rallies from here to set all-time highs or she just rallies for 3 days, I don't really care. We play it day by day. What I can tell you is momentum's flipping up on the daily. We've got the PPO trying to get the histogram positive, trying to get a bull cross here, trying to capture a declining 20. I mean, look at this massive gap down on volume. Okay? This day, May 5th, tons of volume. So is this an exhaustion gap? What happens if they close above 485? We've broken this downtrend, rally to 680. You know, to conclude this video, what I believe is going to happen at some point, and I do believe these corrections are going to end this month, is that you're going to get a rally back to 50%, or at least 38% on all of these stocks. So 38% would be back at 860. It might take you 6 months to get there, but that's 160% appreciation at minimum. And I do believe these levels on the monthly time frame that have massive volume and institutional participation on monthly, quarterly, yearly charts, when they come back to test those levels, they're not for day trades. They're testing those levels to accumulate and push price either higher or lower from those levels. So with that, I'm basically done. I'd like to cover maybe, that's it. That's it, right? And just take this one note with you. You've got a low to trade against, right? And it's going to be the low from Thursday on basically every chart. If we get below that low for an hour, maybe one day, that's fine. Those are traps. You see that stuff all the time. But if they start closing a day, 2 days, 10, 15 hours below, a day and a half, you're like, wait, what's going on? We're not recapturing that level. It's time to go. And, because on every one of these charts, don't fool yourself. When you close below the bottom of the band, that's when you're at most risk. Okay, you're below the bottom of the band. That means you're on the outside of the bell curve. This is the 5%. This is what happens 5% of the time. And in that 5% of the time, you get the extremes. That's the time you can get, hey, we just dropped, 60%, but yeah, we closed below the bottom of the band and we're going to drop another 60. All right, from that configuration, you get insane moves. But what ends up happening is the weekly starts to curl up. The daily starts to curl up and capture the 10 and the 5. And volume floods in. And you start to get exhaustion. Right? That's what we're looking at. And I do believe the upside for all of these is going to be in these names. Not the names that were leading to start the year. These names are putting in divergences. These names down here are putting in capitulation lows. All right, that's it. If you liked the video, hit the like button, subscribe, share it, and we'll see you in the next one.